Ever wonder how people in North America make money while sitting behind a computer, staring at numbers and charts? How can one person lose thousands of dollars in minutes, while another becomes a millionaire doing the exact same thing? Today, you'll finally understand how the stock market actually works across the United States and Canada in simple terms. No confusing jargon, no boring textbook talk. Just the truth about how this massive money machine operates and how regular people use it to grow their wealth. Welcome to the channel. If you've ever wanted to understand what happens inside the stock market, what causes prices to rise or crash, and why everyone from big banks to teenagers are obsessed with it, this video will break it down step by step. By the end, you'll know exactly how the system runs, who really controls it, and how you can start thinking like an investor. 1. What the stock market is. Let's start with the basics. The stock market is simply a place where people buy and sell pieces of companies, called shares or stocks. When you buy a share of Apple, for example, you're not just buying a number on a screen, you're owning a tiny fraction of Apple itself. If Apple grows, your share becomes more valuable. If the company struggles, your share price drops. In North America, the two biggest stock markets are the New York Stock Exchange (NYSE) and the Nasdaq. Both are based in the United States, and together they handle trillions of dollars in trades every year. Canada has its own major exchange, the Toronto Stock Exchange (TSX), where Canadian companies like Shopify, RBC, and Enbridge are traded. 2. How stock prices move. Now, the big question: why do stock prices go up and down every second? It all comes down to supply and demand. Basically, how many people want to buy versus how many want to sell. If more people believe a company will do well, they start buying its stock, pushing the price up. If investors lose confidence, they sell and the price falls. But it's not just emotions. Prices are also affected by company performance like profits and earnings reports, economic news like interest rates or inflation, world events like elections, wars, or pandemics. In short, every stock price tells a story, a mix of facts, feelings, and global forces. 3. The players. The North American stock market has three main types of players. 1. Retail investors, everyday people using apps like Robinhood or Wealthsimple. 2. Institutional investors, big players like banks, hedge funds, and pension funds managing billions of dollars.
3. Market makers. These are companies that ensure there's always a buyer and seller, keeping the market running smoothly. Institutional investors control most of the money, but retail traders have a huge influence too, especially after 2020, when platforms made trading accessible to anyone with a phone and internet connection. Remember the GameStop craze? That was a perfect example of how retail traders, united on social media, moved markets worth billions. 4. How people make money. There are two main ways to make money in the stock market. 1. Capital gains. When you buy a stock at one price and sell it higher later. Example: you buy Tesla stock at $150 and sell it at $250. That's a $100 profit per share. 2. Dividends. When companies share part of their profits with shareholders, usually every few months. Companies like Coca-Cola and Microsoft are famous for paying consistent dividends. Some people trade daily, chasing small profits. Others invest long-term, letting their money grow over years or decades. Historically, long-term investors tend to win. The North American markets have grown massively over the last 50 years. 5. Risk and reward. Of course, the stock market isn't free money. Prices can crash overnight. In 2008, millions lost jobs and homes after the market collapsed. In 2020, when the pandemic hit, stocks dropped 30% in weeks before skyrocketing again later. The key lesson: the market rewards patience and knowledge, not luck. People who understand how it works, diversify their investments, and don't panic when things drop are the ones who come out ahead. 6. Final takeaway. So, how does the stock market in North America really work? It's not magic and it's not a scam. It's a giant system built on trust, data, and belief, where millions of people decide every day what they think the future is worth. And the smartest investors, they don't try to predict every up and down. They study, stay patient, and let time do the heavy lifting. So, if you found this breakdown helpful, hit subscribe and turn on notifications for more videos that explain money, markets, and technology in plain English. Thanks for watching, and remember, the best investment you can make is in learning how money really works.